In our today's episode revision 4, we will learn the income method of calculating national income. So let's first understand how this income is generated and distributed. So step 1, we need to find the sum of the factor payments of all the firms in the economy. We know firms make factor payments for the factor services that are provided by the households. So this sum of the factor payments gives us the net domestic product at factor cost, because these are factor incomes. Now these factor payments or factor incomes are divided into 3. One, compensation of employees, which is wages and salaries, which could be in cash and kind, plus the social security contribution made by the employers. So this is very important, employers. Then the second one is the operating surplus. The factor payments made towards rent, royalty, interest and profits. Then third comes the mixed income of the self-employed. So this will give us the net domestic product at factor cost. So it's giving us the domestic product. When you add the factor income from abroad, then we get the national income, which is NNPFC. Net national product at factor cost is net domestic product plus net factor income from abroad. So this is how we arrive at the national income. However, there are certain precautions to be taken. We need to avoid the transfer payments, that is made as gifts, donations, scholarships, etc. Then we need to avoid the capital gains and the windfall gains. Windfall gains from the lottery, etc. Capital gains from the sale of second-hand goods, shares, etc. However, if a commission is earned, then that has to be included. Include income from self-consumed output. This is also called the imputed costs, that is imputed rent, etc. Then we need to include free services that are provided by the owners of the production units, like the imputed value of their wages, their rent, profit or interest. So this has to be included in the national income. Now in the examinations, we are generally asked, how will you treat the following in calculating national income? Okay, so if an explanation is asked for them, how will you treat and the reason, then each will be for 2 marks. One for saying yes, no, and the other giving the proper reason. So let's look at them and try to answer these questions. Factor income from abroad. Factor income from abroad has to be included in the national income. So this is very important. We need to pay attention to this, whether he is asking us national income or domestic income. Since we are talking about national income, here we will consider them with that point of view. Remittances from NRI, non-resident Indians, to families in India. So these are remittances. So remittances are transfer payments. So these will not be included. Whether domestic or national, these will not be included. Profits earned by an Indian bank abroad. What is this? This is a factor income from abroad. From abroad. Isn't it? So this will be included in the national income. Then fourth one, expenditure on old age pensions. What are these old age pensions? Is it a service, factor service? No. So this is a transfer payment. So this will not be included in the national income. Then medical expenses of a firm on treatment of an employee's family. Who is paying this? This is being paid by the employer. So it comes as a part of the compensation of employees. So this will be included in the calculation of national income, since it's a factor payment. Then payment of corporate tax by a firm. What is this? This is a transfer payment. So it will not be included in the national income. Prize won in a lottery. Will this be included? No, because it's a windfall game and not a income. So it will not be included in the national income. Then commission received by a dealer from a buyer and seller of a house. So this is a commission on the sale of the second hand goods. So it is a factor income, because any commission paid to facilitate the sale of house is a fresh production activity. So this will be included in the national income. Royalty, yes. Then payment of interest by a firm to a bank. Will it be included? Yes. Why? Because the loan was borrowed for carrying out the production of goods and services. So this is a factor payment. So it will be included in the national income. Now, having learnt about how to calculate the national income and also how to treat certain things while calculating national income, let's now try to solve a few numericals. I have here 3 numericals. One, this is taken from 2013 question paper, an old paper of course. So calculate gross national product at market price, GNP MP. Okay, so we are given certain items and the expenditure or the income. Here we are given compensation of employees, interest, rent, profits, employers' contribution to social security schemes, dividends, composition of consumption of fixed capital, net indirect taxes, net exports, net factor income to abroad, mixed income of self-employed. Now, by formula, we know that this employer's contribution to social security schemes is part of the compensation of employees. So this as such will not be included in the calculation of the national income. Then dividends. What is dividends? It's a part of profits. It's a part of profits. So profits is already given to us. So we will not include dividends either. Okay. Then we are given net exports. Where do we find this net exports? It's a part of sale, isn't it? So this comes under value addition. So we will not include exports also. So now we are left with certain components that we will use to calculate the gross national product at market price. Now what is a formula to calculate this gross national product at market price? We will arrive at this gross national product at market price from the domestic product. This is what we learned, no? NDPFC. So net domestic product at factor cost to gross national product at market price. So to move from net value to the gross value, we need to add depreciation. Yes. Then factor cost to market price, we will add the net indirect taxes. Net indirect taxes. So this is how we arrive at the gross national product at market. But see, this is domestic product. We have to arrive at the national product. So what do? We will add the net factor income from abroad. So this is how we will arrive at the gross national product at market price. What did we do? To arrive at the gross, we added depreciation. To arrive at the market price, from factor cost, we added net indirect taxes. And then from domestic to national, we added net factor income from abroad. Okay. Now we will put these values. Now how do we arrive at this net domestic product at factor cost? Net domestic product at factor cost, we learned, is equal to compensation of employees plus the operating surplus plus the mixed income group. What is this operating surplus? This is rent, interest and profit, isn't it? This OS is nothing but rent plus interest plus profit. So that is how we'll put these values over here and check. However, if you look at this, I'm just simplifying it. Compensation of employees is given to us over here. We'll use a pencil. Here 2000 rupees. Then rent is given to us over here 700. Interest is given as 500 over here. Then profit is given as 800. Then we are given the mixed income. Are we given the mixed income? Yes, 1500. And then depreciation to arrive at the GNP MP. Now we have added this to get the NDPFC. Now depreciation is given to us as consumption of fixed capital, which is 100. Then net indirect taxes, are we given net indirect taxes? Yes, 250. Then net factor income from abroad is also given to us as 150. Now we have eliminated exports, dividends and employers' contribution. So this all these components need to be added. That's all. So we'll put those values over here and find the answer. Okay. So I have put all these values over here, and this comes to the calculation shows 5,700 crore. This is important because we are given this rupees in crore. So that's how you solve it. Let's solve another numerical. Here we have to calculate the value of rent. This is a 2019 question paper. We have to calculate rent over here. And what are we given? We are given gross domestic product at market price, mixed income, subsidy, rent, interest, rent, profit, compensation of employees, consumption of fixed capital, that is depreciation, and indirect tax. So indirect tax and subsidies will give us the net indirect tax. So this we need to be very, very careful. Now what is being asked here? This is not national income. This is domestic product at market price. And again we know gross domestic product at market price is equal to net domestic product at factor cost. Now from net we have to move to this gross. So how do we move? Plus depreciation, right? And plus net indirect taxes, because factor cost plus net indirect taxes will give us the market price. Now we need to find out rent, and we know rent we will get from NDPFC, which is equal to compensation of employees plus rent plus interest plus profit plus the mixed income group. So we need this rent. So rent we will put over here to get the some value, and then we will put it in the gross domestic product to arrive at the answer. So let's write rent on the left side and GDP MP, which we are given, and subtract the rest of them. That means subtract compensation of employees, interest, profit, mixed income, minus depreciation, and minus net indirect taxes. So this will give us the rent. So are we given GDP MP? Yes, we are given GDP MP. Then are we given compensation of employees? Then interest is given 800. Then profit is given 975. Then mixed income of the self-employed, yes. Then depreciation or the consumption of the fixed capital. Then net indirect taxes. Net indirect taxes we'll have to find out from here. 2000 minus subsidies 250. Okay, so we'll put those values over here to arrive at the answer. So after putting in the values over here, we get 475 crore. Okay, so this is important because we are given in crores. So that's how we'll arrive at the rent. Let's now solve another numerical, which is taken from the sample paper 2020. Calculate compensation of employees. Now compensation of employees is being asked. And what are we given? We are given profits after tax, interest, gross domestic product at market price is given to us. Then goods and services tax. What is this goods and services tax? Indirect tax. Consumption of fixed capital, rent, that is depreciation, rent, and corporate tax is given to us. Now this corporate tax and profits after tax, these two will be included under profits because corporate tax is paid from the profits. Okay, so both of them will be taken as profits. So this is where we have to be careful. And goods and services tax is the indirect tax. So we are given GDP MP. So we will arrive at the compensation of employees from the GDP MP that we are given. And by formula, we know GDP MP is equal to NDPFC, yes, plus depreciation plus net indirect taxes. So here we are given GST. Okay, So from the NDPFC we will find out COE. So we will put this NDPFC is equal to compensation of employees plus rent plus interest plus profit plus the mixed income group. Okay, so from here we have to find the COE. So we'll put the COE on the left hand side to write the formula. So how do we write that? The compensation of employees will be equal to, now we know this GDPMP, and subtract everything from GDPMP. So GDPMP minus, we'll put it in bracket and add all those things, rent plus interest plus profit plus mixed income, okay, plus so this is going to on the left hand side, so minus depreciation minus GST, okay. So that will give us the answer. We'll put the values over here. We know GDPMP, which is 200. Rent, we know rent is given to us over here, GDPMP. Then interest is given to us here. Profits will include 20 plus 5, 25. Then mixed income we don't have, so we need not worry about mixed income. Depreciation is given to us and GST is also given to us. So we will add all of these and subtract from GDPMP. After putting in all the values over here, we get rupees 45 crore as the answer. So this is the compensation of employees. So here what is very important while calculating these national incomes is, first you should be thorough with the formula. Then find out from what is given, okay, what can be included over here. And next important thing is what should be eliminated. Like, you know, in the previous example we saw certain things could be eliminated, like exports was given to us, so that could be eliminated because that is a value addition part, okay. So we need to be very careful. And profits after tax, corporate tax, where are these included? So it's very important that we understand that corporate tax and profits after tax are sum total of the profits. So if we can do that, then calculation of national income becomes easier.